Donald Trump delivered an unconventional, even confrontational press conference on Wednesday, in sharp contrast to his gracious acceptance speech on election night. These two styles, call it hard Trump versus soft Trump, showed how difficult investors are about to find his presidency and helps explain why the dollar and equities are starting to reverse. The dollar's post-election rally to a 14-year high and the Dow Jones Industrial Average coming within a whisker of the 20,000 mark were driven by a combination of factors. The strength of the US economy was one, the Republicans gaining control of Congress another. And then, of course, was the promised Trump agenda of tax reform and infrastructure spending. But investors keep talking about the conciliatory tone of that acceptance speech. That was the surprise factor for investors. Was it a key reason why investors got behind the rally? Who knows? But put it another way, how far and how fast would the dollar and equities have risen if, instead of getting soft Trump on the night of November the 8th, investors had heard hard Trump? Anyone watching the Mexican peso during the press conference would see this hard Trump versus soft Trump split being played out. It fell to an all-time low when Mr. Trump threatened a border tax on US companies thinking about building a plant in Mexico. And yet, within seconds, the peso was climbing again because Mr. Trump was praising Mexico for being so nice and calling its government terrific. Investors have been putting off the task of trying to assess Donald Trump's chances of making good on his promises, but surely not for much longer. An economic index of uncertainty drawn up by a team of US professors is at elevated levels. Yet the VIX index, which is Wall Street's favoured gauge for tracking expected equities market volatility, remains becalmed. There is a lot of uncertainty regarding Donald Trump that the market has yet to price in.